Hello, hola. Welcome to Rena MoMoney Plus video. My name is Rena MoMoney, and today we will be talking about how to get a real estate investment loan with bad credit. Come on in. Okay, let's be clear. Credit does matter. The higher your score, the better off you'll be. You'll have more options. Your interest rate will be a lot lower, and you'll have more opportunities to get even more money and more properties with more loans. So bad credit is bad, but I'm going to show you how and who will still loan to you with bad credit. One of the first ways to get loans with bad credit, if you're trying to get a loan for your investment property, is hard money. You've heard that before, I'm pretty sure. And if you haven't, a hard money loan is basically a lender that loans you money based solely on the property. So if there's a lot of equity in the property and the repairs are low, or if the repairs are high but there's still a lot of money to be made, a lot of equity, then he or she or that lender will loan you money, hard money. And when I say hard money, because you have bad credit and because it's based on the investment property itself, the interest rate will probably be high. You're looking at anywhere from 12 to 20% for a hard money loan. Hard money loan is a short-term loan and is usually good for fixer-uppers. Not something that you're going to keep and rent out, not something that you're going to hold on to for a long time, usually for short periods. And when I say short periods, anywhere from 6 months to a year is good when you're using a hard money loan. Another great way to get a loan if you got bad credit is to apply with a partner. You know, you want to have a co-borrower, because that lender, he'll feel good, or she will feel good about the fact that he has two that's on the hook. So both of you need to have some form of credit, but if one have bad credit, get a partner or a co-borrower to go along with you, and hopefully their credit is a little better, so that way the lender will feel good about having two people on the hook. So if you have a 650 but he has a 680, although a 680 is still a fair number, a lot of times because there's two, the lender will feel comfortable with that and will loan to you with bad credit. Private lenders. A private lender can be your parent, it can be a neighbor, it can be someone that knows you personally, that's private, that's not an institution, that's not a bank, but they have money. Maybe they have a 401k plan that's just sitting up there, that's not making any money, and you can say, hey, look, we'll have some scripts on that too. You can say, hey, look, I'll give you 10% because I know your 401 is only paying you 2% of your money, and I can return that within a year. So private lenders are really a good source because they're only going to trust your ability. They're going to trust that you decide you have a good piece of property and that they're going to get their money back. They won't care about your credit if you're coming from a private lender. So if you're using a family or a friend, or your dentist, your lawyer, your attorney that doesn't really care about real estate but has money, private lending, they'll loan to you with bad credit. As long as that vision is there and they know that it's going to work. Some may ask you, okay, show me how this property is going to make me such and such dollars, or you're going to make the money to be able to pay me back 10% that you're promising. Okay, portfolio loans. So if you have rental properties, you can put all the rental properties together and they will lend you on a portfolio loan, because guess what? They'll have 2, 4, 5, 8 properties on the hook. So if you already have rental properties, a portfolio loan will be great. And one of the lenders that will loan you, even if your credit is low and you're trying to get a loan, is CIVIC Financial. CIVIC Financial is a lender I think that is still loaning as low as a 620. So CIVIC Financial, that's the nugget you want to keep.